Hello everyone, welcome back to my show. This is PJ and you are watching the Reno Insider with PJ. As you know, every week I'm going to launch a new program inviting people from the local community here in Reno, those who are important, those who build our community, those whom I like and have worked with or whom I'd like to work with. Today I have a wonderful gentleman with me. He's a loan officer who's been around in Reno for ages, if you don't mind.
Nope.
His name is Bill Barringer. So thank you so much for coming on the show.
Thank you, PJ.
And really, I don't know much about you, so why don't we just start at the beginning? Are you from Reno? Are you a real Renoite, or are you a transplant like me?
No, I'm a transplant, but for quite a while. I've been here about 33 years now.
Oh my
I
gosh.
drove out from New York with a 6-month-old baby crying in the back, so it was quite the trip. But no, about 33 years been here.
So what have you brought here to Reno?
Well,
From New York?
Yeah, basically my family. We've had a good time here. The kids really enjoyed growing up here. They're all grown now. We have some grandkids around, so they get to start enjoying it too.
Yeah, I think Reno grows on you, doesn't it? They say
Yes.
that, and it's so true.
Yeah, well, being a New Yorker, I like the 4 seasons. I just don't like to shovel snow 6 months out of the year like I used to. So here, when I want the snow, I go drive to it. So,
Yeah, that's true. We have it right here next to us.
yes.
So, since you've been here so long, did you come here as a lender, as a loan officer, or it just happened somehow?
Actually, it just kind of happened. I used to work with Chrysler Corporation years ago back east, and my wife worked for them. Worked for the FAA as a radar technician. She was actually the first female radar technician in the country. And so she moved out here, and then I kind of followed along and had a job offer at one of the big banks, and then they all of a sudden pulled their financing for automobiles. So I kind of wallowed around and got into mortgages. So it was the best thing I ever did. It's been about 30 years now.
Amazing. You must be one of the original loan officers here in the town.
Yeah, there's few of us dinosaurs left, that's for sure.
So that means that you also been around when the bubble hit.
Oh, yes.
And I keep hearing about that. You guys know I'm from Europe, so I didn't have that experience here in the States. We had it in the country where I lived. Anyway, so going back to the bubble, I heard it was really horrible here, just as in my country. Were you able to help anybody? Was there a chance to get some people, stay in their homes?
Actually, there was quite a few of the people did stay in, even though they're upside down or underwater, what we call underwater, which means that they owed more than the house was worth, because the values dropped anywhere from 50 to 75%. Huge drop. Over the years, I've also do business in California. I've seen the ups and downs. California is kind of used to having them. Reno never happened. It was always nice and steady. When we started seeing the 12% and 13% increases a year, I was a little concerned because back then our economy was tourist-based. It was casino-based, tourist-based. Didn't have a lot of businesses. It's a lot different now. Now we have the large companies that are not necessarily recession-proof, but at least they give us the basics for people coming in, have higher wages. The other big thing is that our lending criteria has gotten back to where it should have been back when I started. We had very specific programs, debt to income, which means your income to what your debt is, your total credit scores, assets, reserves, all those things were set. And now in 05 and 06, when the lenders really loosened up, so basically if you lived and breathed, you got a loan, there wasn't good sound lending policies. Now we have back the sound lending policies. Maybe we've gone a little bit over top, but at least then we're safe that we're not going to have those huge decreases in values. And if we do, then I think that we've got the economic base to carry us through.
Yeah, you're actually just responding slowly to my question, the next question, because I have clients who are actually quite scared having another bubble. And I keep hearing that, I'm not sure I want to buy, I don't want to invest, I want to wait it out, it's too high, we're going to have another bubble. So what do you think about that? I read a lot, and to me it seems that we have an economic backup to that. But as a lender, how do you see that?
Well, number one, my minor in college was economics, so I do have a little bit of base for it here. Nationwide, we're starting to see an increase nationwide as far as a nice kind of tame inflation, but we're starting to see nice 2%, 2.5% increases per year. That's sustainable. When you start to get to 6 and 7%, the inflation kicks in. It's just not sustainable. You just can't keep doing that. Right now in Reno is a microcosm of that because we have more jobs than we have people. And what that's going to do is it's going to start building up and it's going to start creating a wage increase. So we're going to starting to get some wage increases here. You can see that as people already coming in. The rental market now is crazy.
Yeah.
That's less than 1% vacancy factor.
Yeah.
And that's, so you just can't find something to rent. At some point, my hope is we're going to start seeing some builders come in and give us that medium price to where now people in the lower end, the 200,000, the people that owe 100, 150, 200,000, now they can get equity out, buy up the move up home, and that'll free up some of these, the first time home buyers or the people that are just entering the market. So that's what I believe is going to happen. And I think that's where we're starting to see that happen, not as quick as I like to, that's for sure.
Well, we have builders coming in and they've been building. If you drive around Reno, there is no place on the outskirts where they are not building, whether it's the north, the south, the west, or the east. It's just happening. It just takes quite a lot of time till we will catch up with all the need or the demand, and then finally the market can kind of like level out. In the meantime, as you mentioned, those first home buyers, or those people who don't have that much money as the market, I mean, average right now is $400,000 for a home. So those who can't afford that, do we have grant programs, or does the state support those people, or how can they buy a house?
Well, the state is actually kicking in. The two most prominent ones are Nevada Housing and Nevada Rural Housing. They're both state agencies that offer grants with free money. Doesn't have to be repaid. They do it as far as do a second mortgage, no interest, no payment due for 3 years, then it's forgiven. The reason they have that, the 3 years, if you pay it off in less than that 3 years of refinancing, you're going to pay a prorated portion back. So that's great because it helps people come in with the 3.5% down of an FHA. Conventional, you can go with 3% down. There is mortgage insurance. The advantage of, say, a conventional loan is that mortgage insurance will go away, so it helps them in the future. So there are programs out there.
And you can combine them, I guess. So
that's correct.
If needed, they can even come down with like 1% down and, use their money if possible.
Yes, you can get the grant, and even you can get the grant to cover up to 5 or 6%, or excuse me, 4 or 5%. They just changed it.
Yes.
4 or 5% of the sales price. There are a couple additional fees under the grant program. The rates are slightly higher, but at least then that takes over the worst roadblock of buying, especially in a first-time home buyer, is you can't save that money.
Yeah.
Well, this helps to do that.
I was just looking at the interest rates, and because I know I'm going to meet you and you've been in the market for so long here, I looked at like they were like 18% once in a while.
Back in the Carter years.
Exactly, and now we are down to like 4.5.
Well, we're moving up into the fives. We are starting to see some movement up, especially since the election of last year. We're starting to see some inflation that are coming in. What happens in inflation is that will drive rates up because the real dollar, as far as the cost of investors like to have a return of 1 or 2%. So if you're having an inflation rate of 4% and you're charging 5%, that's only a 1% return. So that's going to move the interest rates up to say 6%. Now, if you have an inflation rate of 1%, that's when we can offer those 4%, so 3.875. We're probably now in a rising interest rate market, where I don't see us going back to the 18% again. We have a Federal Reserve now that controls that. It's outside of Congress's hands, and the president can't control it. So we have an independent body that works on getting the inflation, so it's no longer politicalized like it used to be back then. But
so having heard that, my suggestion is, if you're ready to buy, if you're thinking of buying, this is the time now, because we are still low with the interest rates. And if you're interested in buying, you might reach out to me or to Bill Barringer, or both at the Homeowners Financial Group, and we would be happy to help you. Thank you so much, Bill.
Thank you.
Thanks for your time, and see you next week.
Thank you, BJ.
Bye-bye.